Welcome to the midweek market update where I do a technical analysis and give you my thoughts on SPY the Qs and IWM. This week I also have 6 trade ideas to share with you towards the end of the video, so stay tuned. Jumping right into our S&P analysis, talking about our sectors as we always do. Who was leading, who was losing, and where was the weight? Well, energy led the pack today, up about 1.25%, whereas real estate was down almost 0.75% there. So neither one of those make up a huge portion of the S&P. We know what does, of course, is our XLK for the tech sector here, down about 0.1. Our financials actually kind of were stronger today, right? Up about 0.44. And then the healthcare sector here kind of flat, only down 6 basis points. Let's check in on some of these charts and assess our risk. We've been talking a lot about the push and pull between the tech sector and financials, and I think it's going to become evident here, right? The tech sector has really taken the reins and brought upon us this most recent leg up in the S&Ps, as noted by this move here, and I think you can clearly see that the risk is starting to mount, right? As we get some sort of pullback here, unless financials pick up the slack, there is some room for the S&P to come down a little bit, and we'll talk about that more when we get there. There's some structural issues with our S&P, as we know. On any sort of pullbacks, we're just looking for this area to hold at 144. That would be perfectly fine. A pullback here would be healthy and, in my opinion, justified, right? We confirm this as newfound support and continue the daily uptrend to look something like that. So keep a close eye on XLK. Again, I'm not calling for it to be all out bearish, right? We simply have a little bit of a question mark indecision doji forming up here. It doesn't mean just short the thing, but it also doesn't mean, just go all in long. So keep an eye on the XLK here. XLF is going to be, the counterpart of that, of course. And in last week's video, we talked about this obvious break, right, underneath, and then what would happen on the retest. And it looks like so far we are accepting back inside of this overall range. Remember that range being defined by something like this. So, for now, kind of treating it almost like a look below and fail back up into the range, but I really want to see more acceptance, stronger acceptance above that 36.61 in order to sort of, sustain that rally that we sort of theorized about, right? If the XLK sees that pullback, then you better believe that the XLF will need to sort of do something like this to really carry those S&Ps higher. And again, I'm not saying that has to happen, but if the S&Ps are going to continue, this is sort of one of the scenarios I could see that happening in. If it rolls over here and tech sees that pullback as well, then you just get a lower S&P, right? It's not a big deal, but these are the things that you're looking out for. Next up, we'll go to our healthcare sector, and again, things look fine here. Healthcare has kind of been that solid, steady rock, consolidating in this range. We've been talking about that, sort of higher acceptance into the 50% mark and above, and now we're getting that break to the upside. So I do think there is some room for the healthcare sector to run, right? When you consolidate for a long period of time like this, generally you see a breakout of the range, a doubling of the range, which would put us right up around that 128 handle, maybe slightly higher, 128.50, slightly off screen there. So XLV could be another piece that keeps the S&Ps moving higher as a whole. Let's check in on our VIX. So VIX here, this has been pretty much a snooze fest, right? I've been tweeting about, wake me up when VIX is back over 19. We get some volatility in the ES futures, but as it sits right now, it's just at that 15 floor down here. So really not much to do in terms of expansion of range and taking fades and things like that inside of the ES. So unless this thing really starts to perk back up, that strategy is kind of out the window for now. Next up, we're going to check in on our TNX. And again, I said that we might have done this with financials in the next week's video last week. However, you can see I've already forgot there. I will say the TNX is starting to show and confirm more of a downtrend here, breaking underneath this sort of floor that we had, temporary floor in place around 1450. With that close below, I would watch for this to maybe continue lower, and obviously this is going to be kind of a drag on the financials because they like when rates are high, right? That's when they can make more money on their own money and your money that you essentially keep at their banks. So that's the TNX. That's sort of the inside scoop on the S&Ps. We'll head back over here and just check out some of these structural deficiencies that we've been mentioning. Not a whole lot has changed in terms of what's underneath us. I would start to pay really close attention to this level here, though, at 427.15, right? The reason being, and we'll look at this on the market profile in a moment, is we had a high, we had an open, we also had a low and 2 consecutive lows, which are now forming a 2-day balance here in the S&Ps. So going to be pretty critical, right? I'm sure a lot of short-term traders are using that as a stop loss now that we're above it. So kind of get that firecracker effect underneath if we start to trigger some stops. And as we've discussed in the weekly watch list video, we have the gap here. We have this, which is going to be a mechanical low from the profile. We'll cover that one more time. And then single prints underneath here, that's 419.75 area on SPY. So again, not calling for an all-out bearish move here. As a matter of fact, what you'll notice is, the uptrend is just chugging away, and it's the summer months, right? It's slow, volume is light, and you don't want to get in the way of a grinding market, especially to the short side. If anything, just sort of be skeptical about new longs at this area on the chart. Let's go ahead and check out the monthly as well. I do want to point out, obviously, higher volume today. It was the last day of the month, so maybe some larger firms are clearing up their books, but just briefly checking in on this monthly to get a sense of where we closed. Obviously a hammer candle, right, with a larger lower wick. It's larger than the body, I believe. Yep. And a small, tiny little upper wick. So again, the implications of this are simply that we put in a lower wick. Buyers responded, indicating that the buyers are still in control, right? We're sort of tagging up, if you will, from that monthly perspective. So heading over to now our internals, actually, let's go here. If you're not familiar with this screen, go ahead and get familiar. This is going to help you make better trading decisions intraday. And you can check out the video in the top right on what this all is, how you can read it and set it up on your own charts. What I think is really interesting is sort of the divergence in the marketplace as seen in the internals. Obviously, we had red breath there on Monday, even on Tuesday, and today on Wednesday, it was just really slow grind to the upside. As you know, if you've been a watcher for a long time, we don't really start to take note in the actual volume build unless it's over 300 million. But the opposite can stand true of that as well. You might start to take note if it's extremely low, right? So extremely low volume here across the first part of this week. Same thing with our advanced decliners. I thought it was noteworthy that we had a red AD here. Certainly trended down on Tuesday and then kind of a slow grind here on Wednesday, even as the market was arguably, had stronger rallies, at least on Monday when we saw that explosive move down here in the lower right-hand corner later on in the day on Monday. So kind of interesting to see this divergence. Again, it doesn't mean get all out bearish, but it certainly might mean start to be skeptical about new longs as we've discussed. The only thing I want to point out about the tick here is that when you have days like this where it's extremely hard to read, this is where your cumulative build is going to become, your best friend, right? Whenever this thing has a small read to the upside, small read to the downside, small read to the upside, that's just screaming to you the market's choppy, there's no conviction out there. Probably avoid any strong directional bias in whatever it is that you're trading, whether or not it's ES futures or individual stocks. Let's jump over to our sort of market profile charts here. I want to point out some nuances. First one to point out is that if you look at what happened here, this low almost went directly to this point of control. It was slightly below, but I thought it was noteworthy that it stopped here as opposed to continuing lower and then seeing lower prices in today's session, which you might have expected, opening slightly below the prior day, right? This is technically overhead. Boom, you should go lower as these, poor location longs close out of their positions, but instead more balance here. Again, I mentioned very briefly that we're in a 2-day balance. You can clearly see that if you highlight where the value areas are. They're overlapping, right? There's no expansion of range here. As we move into the post market, you can see things are moving slightly higher, opening higher here, but it will really only be a tell if we can really get acceptance over today's high into blue sky territories. If that does happen, as we always say on the channel, a true all-time high is generally never set in the pre-market session. So if this does something like this, sets a new high, maybe it tags that 4,300 round number here, carry that forward, right? That shouldn't hold as the true all-time high of the move. It generally should be repaired inside of a regular trading hours session. Other than that, not a whole lot has changed here. There aren't very many poor highs. This is okay, right? It's not the best, but it's okay. Good excess, and the lows are the same, right? Good here, as well as good on today's session. So not a whole lot to report there. Did just want to, point out this nuance here of tagging up, sort of, if you will, as the market should have at that high volume node point of control from, Monday of earlier on in the week. Let's go back over and wrap up the broad market with our Qs. We will, of course, just check out these monthlies while we sort of have it open. Obviously, Qs, extremely bullish candle there. And then while we have the monthlies, we'll check out IWM, sort of some more indecision, right? Drilling back down into a daily, though, to talk about some tradable levels into the end of the week here, at least in tech. As we know, XLK, we just discussed, it's kind of carrying that market higher, right? If the Qs were to pull back, the area you would want to see hold is this prior 2-day balance low from in here at sort of that 350 round number, 349 if you want to call it exactly, to those lows from in there. But as the chart currently sits, again, no reason to get outright bearish just because we have an inside bar up here at the highs and it didn't set a new high during today's trading session, right? This can consolidate sideways. It doesn't necessarily have to pull back. IWM, as we discussed on that monthly, just choppy still, not a whole lot going on. It's pulled back off of that sort of area that we expected to break, especially as sort of the cues were, powering the market higher. But, no worries, just choppy, using it more of that benchmark. Just, a quick and dirty way to think about it, right, is because IWM didn't make a new high, a new all-time high, and sort of break out of this range, right? Maybe you just sort of dial back and say, okay, I'm not going to get overly aggressive in equities just yet. Let's go ahead and wrap up the video now with those 6 trade ideas. The first one is going to be on LB. And although I know I just said, don't get aggressive in equities, especially with these summer months now, I'm going to point out some setups, right? And maybe just start to take these things or consider these setups with smaller size than you might normally, right? So here, just a very clear daily bull flag. If we can take this out, obviously the target would be sort of in line with what the range of the flagpole was. And just to use sort of an eyeball test, so from about 61 to about 71, we'll call it a $10 move, could be available here in LB on the true break. I also like the fact that we are breaking out above this prior sort of pivot high, or consolidating at it at least. I wouldn't be interested in taking a trade here if we were to violate Monday's low. Next up, we're going to be looking at VALE, okay? And this is another bullish trade idea, just consolidation at the highs, forming a pressure cooker top up here, just below $23, the whole number. I also like the fact that we have this sort of support trend line in play. Call it an ascending triangle. I prefer to call it that pressure cooker top, but basically your entry is over 23, looking for about a $3 move higher on a true breakout, just based on overall this first sort of pullback, right? That's how you can gauge it. You're sort of looking to double that range up to about 26, call it 25, nice psychological number as a target there. Wouldn't be interested in, potentially pursuing this trade if we were to violate that 22.38, at least into the end of the week. You can keep monitoring this sort of support trend line we outlined, but into the end of the week, I would want to see that hold. Next up, we're going to be taking a look at AAL, and this is actually a bearish trade idea. Oops, AAL, not all. And what we're looking at here, bearish trade idea, what am I saying? This is actually a channel. Okay, sort of forget my notes. My notes are in front of me, but I'm sort of doing two things at once, right? Looking for the bounce off of the low end of the channel. Just a lot of, what looks like accumulation in this area. Strong bounce here. Accumulation here, definitely for this run. Kind of oversold on the run lower as well. So looking to see if history can kind of repeat itself off of support here at 21, the whole dollar. Next up, we're checking out Snap. So Snap is another sort of bullish setup here. Looking for this consolidation to break in one direction or another, right? Ideally, the daily uptrend remains intact. We did break out over this kind of pressure cooker top, so we would like to see the trend continue. So over 68.81, just look to target that all-time high, but you could also play it. Let's say tech does see that pullback. What I like about this setup is because it's a rectangle of balance, if you take out the lows, you just have support underneath to act as a target at 64. So under the lows there at, let's just call it 66, the whole dollar, you have about a $2 target to the downside available here in Snapchat. Next up, we have Dow. I believe this is the bearish trade idea instead of AAL. Yep, this is it. And it's simply a rounded top, right? So generally, whenever you see a 100% retracement of a move, so in this case, we're talking about this move higher was retraced 100%. This is generally thought of as a safe area. You likely are not to go back there, at least anytime soon. So for now, just looking at this as a bear flag. So kind of the opposite of our LB. If you take out the lows of the flag, probably looking to target that 200 SMA. Let's see how this horizontal support ties in. Okay, so maybe 60-50 first would be the more appropriate target, and then holding out for a piece on that 200 SMA. Keep in mind that earnings are around the corner on this one and could impact the trade if you decide to do it with options. Our last trade idea is going to be on MU, and this is Micron. Had a great day, or sort of, a lot of volume at least on the day. Of course, earnings are baked in there, but what I like about it is double bottom, right? And it's starting to show signs that it may want to take out the neckline here at 85.25. If we can do it, look left, kind of a whole lot of chop in here. I would expect to move kind of up to the top of that chop range, maybe up closer to 89.50. In general, just moving out of this double bottom consolidation, breaking the neckline would strike me as overall bullish. You could just monitor it for continuation on any sort of breakout, especially into the end of the week. The structure was repaired, right? We did fill that gap, and obviously there was a rally into the end of the day, which is proving that the buyers stepped up, did their part after the sellers and short-term profit takers sold it off to that gap low. So all things considered, 6 decent trade ideas for you to watch. I hope you enjoyed the video. I hope you learned something new. If you did, let me know down below in the comments section or by simply leaving the video a thumbs up. And with that being said, I wish you all a green trading week.